Hello, and welcome to the Heritage Escrow Guest Speaker Series. I am Jerah Payne, your Rancho Santa Fe sales rep, and work with escrow officers Stephanie and Kristen. We have John Curry on with us today. Good morning, John.
Good morning, Jerah. Good morning, everybody. My name is John Curry. I represent the Balboa Park office for Heritage Escrow, and I am lucky enough to work with Howe and our branch manager, Donna Hamilton.
Fantastic. And for those of you up in our Carlsbad area, we have our newest member to the team, Breanna Nadeau, and she's in the same little office with our sales manager, Charlotte Dabney.
Hello. Hi. Good morning, everyone. My name is Breanna Nadeau. I am the newest sales rep for the Carlsbad branch, and I support our three wonderful escrow officers, Holly, Rana, and Anella.
I also want to let you know we also have an Irvine branch with we have Tara, Vo, and Holly as well.
Thanks, Charlotte. And welcome to the team, Breanna. Okay, a few housekeeping items before we get started. Yes, this will be recorded. So if you want to share this with your fellow colleagues or rewatch it over and over again, we will be sending that out. So you can contact your local sales executive to get that over to you, and we will be happy to provide it. Also, throughout the webinar, if you have any questions, please type them in the Q&A or chat, and we'll be sure to get those answered for you. So without further ado, I know it's so important to take care of ourselves, especially these days. And it's stressful trying to figure out what coverage to get and what insurance actually covers. So we decided to bring on an expert in the topic. Today we have licensed health insurance broker Roshanak Clune with us to guide us through all of what we need to know. She is a loving mother and grandmother and an amazing philanthropist, my fellow Rotarian. Welcome so much. I'm so happy to have you, Roshanak.
Thank you, Jerah. Thank you for asking me to be here. Yeah, do you want me to just jump in?
Yeah, tell us a little bit about you and
okay.
I guess maybe a little bit about your background, and then go ahead, and I'm sure you have a ton of information to talk about today.
Well, like you said, I'm Roshanak Clune. I'm an independent health and life insurance broker, and I do health insurance, Medicare insurance, life insurance, long-term, anything. I always say anything that has to do with your body, not your like car or house or anything. I don't do that. But and I've done this for like, I don't know, so many years. I lost count. And things change with health insurance and Medicare insurance every year. Seems like every year something gets added, something gets subtracted. So it's good to review whatever insurance you have every year. And we are gearing up to the annual open enrollment at, I think it was 2013 when the Affordable Care Act went into place. Then they added one of the changes. It was that the health insurance that had an annual open enrollment period as well. Before that, you could buy health insurance anytime during the year or drop it. But then this was added on that there's a certain period of time that you can change your insurance for the following year. So, with Medicare insurance has been like that for a long time. And Medicare insurance annual open enrollment has been October 15th through December 7th for many years, and the effective date January 1. But health insurance is like, it's always in the fall, but the dates change around a little bit. So for 2022, if you want to change it, it starts November 1st till January 31st. After that, you're not allowed to change your insurance unless you have some kind of a life-changing incident happen, like get married, get divorced, spouse dies, have a baby, move from a state to a different state, move from a county to a different county. That gives you a special enrollment period. So then you can change your insurance. Another thing that was added back then was that insurance for under 65, like a regular health insurance, was categorized into bronze, silver, gold, and platinum. So they call different metal levels, and they have different benefits. So it's not like it used to be. There's no pre-existing questions. I don't know if you remember, they ask you what medications you take. If you had any issues, that would make your prices higher or lower. Whereas now it's just depending on your age and your metal level and the company that you pick. And so it's pretty straightforward. And then there are certain companies in each state that they are the credible insurance companies that offer insurance. So there are a lot of more people, they may call you if you could try to Google something online and from other states, or they try to offer you some cheap options, which then turned out to be not the credible insurance. So always be careful with that. And in California, so then they also added that the Affordable Care Act also added on the subsidy. So if you can qualify, you can get some premium assistance. And that depends on the income, taxable household annual income, and how many people are in the household, and the ages of people. And that will tell the Covered California or the healthcare.gov whether you qualify for some kind of assistance, premium assistance or not. And the important thing to remember is whether you sign up through Covered California or directly from the insurance company, it's the same insurance company. So some people say, I don't want to have Covered California insurance, or I don't want to, go through. It's the same insurance. So you can sign up through Blue Shield, through Covered California, or Blue Shield directly through Blue Shield. If you want to see if you qualify for assistance, you have to go through Covered California. Or if you don't, you can go straight through Blue Shield or Covered California, either way. So it's the same insurance. And if you sign up for, say, a Silver 70 plan, whether you are with HealthNet or Blue Shield or Anthem, benefits are the same, co-pays are the same. What's different may be the premiums, and premiums are different depending on if it's an HMO plan, a PPO plan, who are the doctors in a network. So the prices could be different, but the benefits are the same. If you're in a silver plan, you pay the same co-pays, you have the same deductible. So pretty much standardized. So you don't have to worry so much about, like people always say, I don't have any health issues. So that doesn't bring your price down anymore or take it up anymore. You just said, these are the benefits for this year. Take a look at silver, bronze, gold, and see which one would work for your family. And then if you ask me questions, I can give you advice like, well, this much deductible goes toward this, things like that. So it's pretty straightforward. But if you want to do a research on your own and go online, be careful, make sure you're on the right website. Like if you do Covered California, make sure you're on the coveredcalifornia.gov site, rather than, because once you put that in, or healthcare information, then there are all these other things pop up, and some of them aren't credible. And also your name will go on the list, so be ready for getting a lot of calls, whether this is under 65 or over 65. Once you do a research online, all of a sudden you're going to get a lot of calls and mail and a lot of things like that. So that's pretty much this is the way it is. And the people who qualify for assistance and subsidy, like I said, it's based on your annual taxable income. But that is an estimate, because you don't know. You may win lottery, or you may lose your job, or you may get a new job. So your annual income may go higher or lower. So if, say, you estimate a certain amount and got certain amount of assistance, and then you made way more money than that, depending on how much more money you made, you pay some or all of that amount back. So it's not like they're going to come and put you in jail. You just have to try to make a good estimate. And if you're like a self-employed, like a lot of realtors are, that changes from year to year. So just get an average, smart estimate. Don't go way lower or higher. And then if you're an employee, still your income may change. So just that's easier to estimate because you kind of have a gauge. And you have to do taxes, and you have to be employed you have to have not employed, but you have to have a income to qualify for assistance and subsidy. So that's why they ask you for proof of income when you sign up for any kind of assistance.
Roshanak, if you estimate high, let's say you think you're going to make it, and you don't sell as many houses, are you going to get that money back, or is it better to estimate on the lower end and then pay if you go higher?
Yeah. Well, I've heard is that, so you pay that money back during when you file for your taxes. Like, so when you file for 2021 taxes, you pay the extras if you made extra money. However, they say if you make less, then you may get some money back on your taxes. But I don't know, because I don't know if people actually do. Nobody told me they got money back. So that's like, they say you get money back from the taxes, but I don't know. So that's just up to you, that how you want to, for the self-employed people. And it's for the self-employed people, it's adjustable gross income. So that also gives you a little more flexibility. So yeah, that was a good question.
I kind of have like an add-on to that. I know a couple agents they're newer agents, they're just kind of getting their feet wet. And they're working as a bartender or something on the side, where most of their income's cash. I mean, should they just be keeping that to themselves and not putting that on the assistance program? I mean, what's your recommendation?
Well, taxable income, are they going to claim it for taxes? If
I'm
they're
sure
claiming
most of them
it,
aren't.
it's just taxable income. If they're claiming it, yeah, they have to put it on. If they're not claiming it, that's up to them. Yeah, it's
Like
your household.
Credit card tips, everything like that has to be claimed. But if it's cash and they're not putting it on paper, then it doesn't have to be discussed.
Yeah, it's all based on your taxes, because that's how they can tell afterwards how much your income was. You're filing for your taxes. That's how it all comes through. So yeah.
And is there a minimum income you have to reach? I know you said you have to have an income. Is there a minimum income you have to reach?
Yes. So it depends on your zip code, or in California it's all the same, but it depends on how many people in your family, that you're claiming for. So it's different for, like if one person is a different minimum than 5 people. And also in 2021, because of the pandemic and a lot of hardship that people went through, when President Biden came to office, they changed the poverty level amount, and they were with the American Care Act. All of a sudden, a lot more people qualified for getting subsidy, and the people that were already in the system, they got more assistance. They didn't have to do anything automatically, because their information was in the system, so their assistance level changed, and they got more assistance. So because they wanted more people to have insurance, so they changed that, and more people got to sign up, and that became kind of like a life-changing situation too. So a lot of people that they didn't have insurance, or they had different kind of insurance, they could change it and try to see if they can have a subsidy. Yeah.
Makes sense.
Yeah. So, and it doesn't hurt to try. I mean, you can always put your information on Covered California in California and see if you qualify for anything. It won't hurt to try. If you don't qualify, then they also tell you don't qualify. So and then you can just sign up for the insurance. So it's the same insurance. If you get assistance, you pay part of the premium and you get assistance for the part of the premium. If you don't qualify, and like for in California, Covered California decides the amount of assistance. So depending on your, like I said, your taxable income and your household members, different people get different kind of assistance. So it's not like everybody is going to exactly be the same. So it's a little bit different. But yeah, so they want to encourage everybody at least try to get insurance, and if you have like somebody like a trusted agent or that you worked with, they can always help you navigate this system, or you can call Covered California and they can help you out with that too. So the people that answer the phone in Covered California, they can help you navigate the system, because sometimes it gets confusing a little bit. You put the application in. So that's for the health insurance. And did you want me to talk about a little bit of Medicare insurance, open enrollment? So Medicare insurance is when you turn 65 and you worked for a certain amount of time in the United States. If you're an American citizen or a legal resident, you qualify for Medicare insurance. And I always say when you turn 65 is the happiest day of your insurance life, because Medicare insurance is really good. Also, if you've been legally disabled for 2 years under 65, you can qualify for Medicare insurance. And so with Medicare insurance, you automatically, after you worked for so long and you turn 65, you automatically qualify for Part A, so you don't have to do anything about it. You have to sign up for Part B, and there's a premium for Part B that you pay Social Security office. However, if you are under a group insurance, you don't have to do that. You can stay under your group insurance, like your company insurance, your spouse's company insurance, until you retire, your spouse retires or something. So that's the thing. But Part A and Part B both have deductibles, and they both so you have to pay the deductible, and then when it kicks in, it pays 80%. So you're on the hook for 20% of the cost, which if you see a doctor, it's $100 or $300 even. 20% is not that much, but if you have a heart surgery or any kind of step foot in the hospital or whatever, it's like thousands of dollars. If like one day bill is $500,000, you're on the hook for the 20% with no cap. So then there are other insurance, private insurance company that cover those other expenses. Also, you have to sign up for Part D, which is for prescription, whether you take medications or not, because a lot of seniors don't take medications, they take herbal stuff. So, but you still have to have that. Otherwise, you get penalized for that. You get also penalized for Part B if you don't have Part B and you don't have credible insurance. So those are like extra stuff that I can talk to you about it. So open enrollment for Medicare insurance is October 15th through December 7th to change if you have Medicare Advantage plan or for your prescription drug plans. That's when you change for starting effective date January 1. Medicare insurance changes every year. Advantage plans change. There are new plans in the market. There are different benefits. So it's always good to review what you have. There's doctors that are in the network, out of the network, things like that. So it's always good to review what you have. With Medicare insurance, you can sign up for supplemental plan and prescription drug plan, which those plans within themselves are like Plan G, Plan N, and depending on what plan it is, the prices are different. And or do Medicare Advantage plans, which those are county by county and state by state. And Medicare Advantage plans in like this county mostly don't have any premium, include the include the prescription drug plan, and they give you some extra benefits like gym membership, vision, hearing, things like that. So you pay the co-pays as you go, and then when the co-pays gets to the maximum out of pocket, then you don't pay. Like if you had a hard year and had like surgery or whatever, then you don't pay any more after you get to the maximum out of pocket. So with Medicare insurance, you have different options. However, with those supplementals, like if you sign up for Plan G, no matter what company you sign up for Plan G, the benefits are exactly the same, but the price may be so different. One company may be $200, one company may be $350. So, but the benefits won't change. The benefits are exactly the same. That's why it's good to have someone, like if you have a trusted agent, have them check for you. I always check for my clients, see which company has the best price for what you're looking for. And then that's up to you to go with them. Or some people say, no, I like this other company better. I still want to sign up with them and pay more. And that's fine too. So you can do that. That's the time that you would change for next year. So that's coming up in October as well. And I don't know, did I say when the open enrollment for under 65 starts? November 1st till December 31st. And also one more thing I didn't say about the difference between HMO and PPO. And then there's another kind of plans called EPO plans. And HMO plans, you have to stay within the network. You have to have a primary care physician, which is your gatekeeper. And you always have to go through that particular doctor's pipeline, and you always need a referral. PPO plans, you don't need a referral. You can go in the network or outside the network. However, the big thing is, just because it's a PPO plan, if you go outside of network, your costs are going to be way more. So pay attention to that, because the PPO plans say in the network, the prices are different than out of the network. So a lot of people just pick a doctor and go to without checking, and then they get a big bill. So that's the important thing to remember. If this doctor is in the network, your cost is different than out of the network. And then EPO plans, you have to stay within the network, but you don't need a referral. You can go to any doctor in that network without a referral. So those are the three different plans, the difference between those plans. And with the Medicare plans, and supplemental plans, which are, there are, like I said, Plan G, Plan N, Plan F, you can go to any doctor anywhere in the United States that accepts Medicare without a referral. HMO plans, they have some, Medicare Advantage plans, some of them are HMO plans, and some of them are PPO plans. Again, with the PPO plans, different co-pays, different maximum out of pocket than with the in the network and out of the network. With the HMO plans, you still have to stay with the your primary care physician and the pipeline. The same thing with the Advantage plans.
I have a quick question.
Sure.
You mentioned the open enrollment periods from October 15th to December 7th. Does it matter when you start your insurance? Like if you get your first insurance in June, are you still in that open enrollment period from October?
So that's for Medicare. That was for Medicare. And gotcha. Yes, it doesn't matter. That's a open enrollment period. So if you turn 65 in June and you started your insurance in June, but for 2022, you want a different Medicare Advantage plan or prescription drug plan, this is the time to change it. You can't, so this period. And same thing with the under 65, unless if you have a life-changing event, you can change it. However, if you have a group insurance, like if you have it through your companies, they have a different open enrollment, because the companies have open enrollments that they let the employees change their times. They have different open enrollments. So you have to find out when you can change within the company plans. But yeah, but that just depends on how they contracted with the insurance company.
Cool, that makes sense. I have another question, and Jerah, you might want to jump in on this too. Have you ever heard of a broker offering group insurance to their agents?
Yeah, the brokers can do that. They can check for you and see how it would, depending on how many employees you have, what needs you have. Yeah, the brokers can do that. Yeah, you don't have to be like a AT&T or SDG&E to get a group insurance. If you have a group of employees, you can also offer them health insurance. And, yeah. Yes, you can do that. Yeah, so basically, this is the general information about the health insurance in California. And then if there are people, you have relatives or people outside of California, same thing. The Medicare is the same time, always all around the United States. The rules of Medicare is the same all around the United States, but the plans are different. The Advantage plans are different. Supplemental plans are the same, and so they can change. This is a time period that they can change for the following year. And then for the under 65, they can go to the healthcare.gov and see if they can qualify. And if their state, like California, has its own, covered California, or Washington State has its own, you go on the healthcare.gov, it will put your zip code in and send you to the right spot. So then you can see if you can qualify or not.
What is the actual limit of income for one person using Covered California?
Okay, for assistance, because you can use Covered California whether you get assistance or not. You mean for like, if you're qualified for assistance or not?
Well, so any income can use Covered California, but what is, like, if somebody makes 50 or 100 or 150 or 200, is there a certain cap where
yes, for qualifying for a subsidy? Yes, and it's a little different every year. I don't have it memorized, to be honest with you. I have to look at the chart. But yeah, so there's a minimum and a maximum. You have to make a minimum amount to even qualify for subsidy, because like I said, you have to pay taxes for that amount to qualify for subsidy. But yeah, there's a minimum and maximum, and there's a chart for it. But I don't have it memorized. I just put it in there and in the Covered California system, and that would tell you how much you can get. Because depending on your income, you can get different amount too. So somebody that makes more, they will, even if they're in the bracket to qualify, they will get less than somebody that makes less. So yeah,
if somebody doesn't have an insurance broker, they'd just be able to contact you and you'd be able to look that up for them?
Yes.
Or is there a website that they can go to?
They can go to Covered California website, but like I said, make sure you're on the correct website, or they can call me and I'll be happy to help you. With people like me and me, the customer does not pay for our services. So whether you go directly to the insurance company or use an agent, whether it's under or over 65, your premium is exactly the same. So you don't pay me for my services. The insurance company pays me. So what the difference is, and they don't charge you extra for going through an agent, it's the same amount. The difference going through an agent or not is that you get a personalized service, and also you don't have to call 10 different companies to figure out what's what. The agent would do the legwork for you and then tell you and explain stuff to you. So, and that's why insurance companies like agents too, because it makes everybody's life a little bit easier, including their life too. So yeah, and they're more likely to stay with the company if they're happy with their services.
And you guys do other insurances as well. Did you want to talk what
yeah,
else
I do.
is...
I obviously I do life insurance. A lot of people are familiar with that. The thing that's very popular these days, and rightly so, is a long-term care insurance. A lot of people have their they have to take care of their parents or grandparents, so they realize how expensive it is to take care of the seniors that they can't take care of themselves. And like the average cost of like a nursing home in California, not even like the top of the line, is about $5,000 a month. So that can add up really quickly. So a lot of people are buying or signing up for long-term care insurance for themselves. So then they will have control over their own care as they get older, because then they have the money and they have saved up the money. And long-term care insurance for the most part works like a life insurance. So if you have some major life-threatening issues, you may not be able to sign up for it. And the price depends on your age and where you live, basically, but mostly your age. So the younger people they sign up for it, it's a better price. But that's a really big thing now because of there's so many people taking care of their elderly parents. And they call, how they call this generation of like people about my age, like a sandwich generation, because they take care of their elderly parents, and then their children have moved back home to the adult children. So they're in charge. And so it's very stressful. And so those are the people that they sign up for long-term care. But like I said, the younger people are the less expensive it is. So it's a good thing to look into for everybody. As well as and a lot of people sign up for life insurance when they buy new homes, or whether it's like a term insurance, for the length of their mortgage, or a whole life that accumulates interest and give them some other benefits. But so if something happens to one spouse, the other one can pay the house off and not to have those problems. I myself am a life insurance like a poster child, because my husband literally dropped dead in a soccer party at the end of the season soccer party for our 5-year-old who was in kindergarten in our house. And I was left with 3 young children. And if I didn't have the life insurance to get us going, because imagine how it is, you have these children, young children you have to take care of, all of a sudden you have this whole massive situation and the pain and the grief. So that's what kept us afloat and kept me going till I got my foot on the ground and able to take care of my family. So I personally have benefited from life insurance. So I'm a big advocate of life insurance for young families, especially.
That's good information to at least have it so that it covers the house until it's paid off.
Yeah. Or pay your bills. I mean, I personally didn't pay the house off. I just paid my bills till I got my, like I said, came up for air to see what's happened, So yeah. So anyway.
And is the type of insurance that you want based on your income, or is it more preference?
The type of insurance, which kind of insurance?
Health insurance.
That you want based off your income?
I believe that's what they were asking is, I believe that was based on health insurance.
Okay, so the subsidy that you get, the assistance that you get is based on your income. The type of insurance that you get, you choose it. You say, I want a silver plan, or I want a bronze plan. However, if you qualify for a subsidy for assistance, Covered California has several different silver plans. They will assign you to a silver plan if you want a silver, but if you wanted bronze or gold and platinum, no. But for the silver, they have several different silver plans that they choose based on your income, that which one you qualify for. You can't decide, because somebody would call me and say, well, I want to actually do a silver 85 because that's for this reason or that reason. We can't choose that with Covered California. They assign you to one of the silver plans, but you choose if you want silver, bronze, gold, or platinum. That's your personal preference, and based on the benefits. Like if you think how often you go to the doctor, or is this too much of a deductible for you? With the silver and up plans, you don't have to reach the deductible to use the benefits. So you can see the doctor as many times as you want. You just pay the co-pays and you go on. With the bronze plan, which is less expensive, obviously, you can see the doctor, I think 3 times for $65 copay. But then after that, you can't just up and go to the doctor. You have to reach your deductible. Or if you end up with some issue, you need to have like a blood work done or anything. With the silver plans, you don't need to silver and up. You don't need to get to the deductible unless you have like an accident or get in the hospital for surgery or have chemo or something. For major medical issues, you have to reach the deductible, and the deductible is lower than the bronze plans. But the kind of insurance that you like to choose is based on your personal preference and your family's needs of how often you need the doctor and how much you want to spend. And I think I said to be careful if you are going online, whether you are under 65 or over 65, because your number gets out. Not if you go to a Right Covered California website, but if you go like to another website, they ask you questions and you respond, and you get a lot of calls. And sometimes you get calls from out of states or a lot of different companies, and they say, oh, this like you say, okay, insurance for my family is called $1,000, and they say, oh no, you can have this insurance for like $200. Be careful with those things. You can always check on Covered California. The credible insurances and the benefits and the companies are all on Covered California, whether you want to go through them or not. So if you get an offer for a really good price, check it and make sure they are a legit, credible insurance for state of California or whatever state before you sign up for something that sounds really good.
I have one for you.
Okay.
Based on your experience with what you've seen, what type of coverage would you recommend people elect that you don't commonly see people that are getting health insurance elect? Now that would be like outside of life insurance.
Oh, you know what's a good, yeah, that's a really good question that a lot of people don't even know about it. It's a kind of insurance, they call like a gap insurance or a major, like if you have like a major medical issue, like if you get cancer or have heart attack, stroke, you or anyone in your family, God forbid, you end up in a hospital, you still have to pay your insurance premiums and you still have to pay your bills. So there is a kind of insurance that gives you cash and you can choose. And that's different than a health insurance. You still have to have your health insurance. Health insurance pays your bills for your doctors and hospitals and things like that. This just gives you money to pay your extra bills. So that's the kind of insurance that a lot of people don't know about, that it's available. Especially, it's really good for self-employed people, because if you don't work, and then even if your spouse or your children, somebody in the family ended up with some major medical, so you're preoccupied with them and you can't earn as much money. So that's a good insurance to have, that to fill up the gap. So they give you the cash to take care of all the other issues that you have, all the other bills that you have, and and that just depends on how much you want to sign up. Like you could choose, and they're like, for those kind of insurances, there's like, if you only ended up in an emergency room, like for a short time, or like if you fell over the stairs, because I had a client that happened to them. She woke up in the middle of the night, take her dog out, and she tripped over the dog, and then broke a bunch of bones and couldn't go to work. But luckily she had one of these gap insurances, so they gave her cash for the days that she was she couldn't go to work, which is a little bit different than disability insurance. It's health related. It's not just all, so does that answer your question? Yeah. So yeah, that's a really under utilized, and people don't know about such a thing that's available, but that's a very good thing. I personally have all of those because I'm self-employed and I'm mother of these children, and I'm like, I know things can happen to you, so I don't want to take a chance that something happens to me and that I can't pay my bills. So I worry about that.
You've probably heard a lot of bad stories about people that can't, so I don't blame you for having it all.
Yeah. I have this family that they signed up for regular health insurance, and then they signed up for one of these major medical coverages, or like gap insurances, and they had a little son that he was like 2 or 3 years old. Seriously, not even 2 weeks after they signed up for this, he was diagnosed with leukemia and ended up in a hospital. So they had added the children to this plan for like a couple $3 more. And so they got a whole bunch of the cash that they had signed up for, so they could, because mom and dad, they're both in the hospital all the time with their little kid till they brought her home. And they called me and they were like so happy that they thought about doing that. So yeah.
Have you seen any ways that COVID has changed health insurance or things that they've added in due to COVID?
Well, one thing that was added in was that the American Rescue Act, that more people qualified for subsidy and assistance. So a lot more people signed up for that. And also the big change was a lot of people retired. The people that were like over 65 and they were working and getting company insurances, they decided that they don't want to work anymore, and they retired. So they went on Medicare insurance. So that was like my personal experience with COVID. Made people appreciate their time that they have. So they wanted to not to work and also not to go out and be exposed.
You mentioned that there's a certain amount of time that you have to work in order to qualify for Medicare.
It's 40 quarters. You have to work 40 quarters. And if you pay attention, when you get mail from Social Security, I don't know how old you have to be to get this mail. I feel like I remember getting it even when I was younger. It will show you get a letter from Social Security and it will show you how many quarters you have in and how much more you need. So, but you do have to, it's like 10 years basically to pay taxes, and I think 40 quarters to pay taxes to qualify for Medicare.
And a quarter would be obviously 3 months.
Yeah, is it? Yeah, I think it's at least 10 years, but I need to study up on that. But yeah, and also, so here's another thing. There's some people that they haven't worked that much, even though they're older for whatever reason. Some people that were out of the country, like they worked out of the country, they didn't pay taxes. You have to pay your taxes here. Like even the self-employed people, we pay into our Medicare insurance. So those people, they can buy it. So you say you don't qualify for Part A just yet. They tell you like you can buy it for this much money until you work and pay taxes. Or they came to the United States later in life, they immigrated here and they start working later. So then they can buy from the Social Security, buy for their Part A and Part B. So they can qualify for it. But Social Security can tell you how much you pay for that if you haven't earned it. Yeah.
Well, thank you so much. If there's any other last minute questions, go ahead and get them into the chat. Was there any other topics that we haven't covered that in your expertise? We
That's what I'm
should
trying to think. As
know
soon as
about
we hang up, I think of 10 things that I should have said.
What about wellness programs in California? I know that's something. Is there any wellness programs?
What do you mean? Wellness programs?
Maybe outside of insurance? Is there?
Well, so with Medicare, if you do your wellness checkups, a lot of companies, they give you bonus, like they send you a La Visa card and things like that. And also all of the physicals, no matter what level of insurance you have, with under 65 is 100% covered. So you can go for physical every year. You can get your pap smear or blood work for your annual physical every year with 0 copays, which is if you have insurance. So which is a really good thing to do. And some of those gap insurances that we talked about, if you do your annual physicals, they give you some bonus gift cards or whatever. But
That's good information.
Yeah.
I had somebody ask for your information. So I put your information in the chat so they can contact you directly. I think.
So one thing I want to say is make sure that you review your insurance every year because things change. So make sure you review your insurance every year, whether it's under 65 or over 65. Always look at the benefits and the doctors that are in the network and all of that. Just do a quick review so you won't get surprised something happens during the year.
That's good information.
And the health
'cause it changes.
insurances do not include vision or dental. Those are separate insurances that you can sign up for, but they don't include that. Some of the Medicare insurances cover that, but just so you know, because people come out of group insurances and they used to having dental and vision. They go, no, I want one package. With the health insurance, it doesn't come with one package. Sometimes you can add it on with the same company, but it's not part of your medical package. So, and there's lots of different dental insurances that you can check and see which one your doctor is or dentist is in the network with. So, and vision insurance is like the best thing. You get your money's worth of vision if you need glasses or contact lenses. So you totally get your money's worth of that if you sign up for vision insurance because it's very inexpensive. But other than that, I think we basically covered it. And feel free to call me if you think of anything else.
Thank you so much. Yeah, and somebody did say, can you get dental insurance separately? And the answer is yes.
Yeah.
So if somebody wants just dental insurance or just vision, there's companies that provide that just on.
Yeah, and I can give you some information about that. Just give me a call. Yeah.
Perfect. Thank you so much, Roshanak. It was.
Oh, you're welcome.
To have you.
It was my pleasure.
All right.
Thank you. Thank you. It was great information.
Thank you, guys. Have a good rest of the day.